Okay, so should we even go over? Right, go lay down. Should we even go over the same stuff we went over last? Not the same stuff, but credentials and stuff like that.
I don't know. It's your call, man. I don't even know what I said last time.
I don't know what you said either, but
Yeah.
okay.
We could I don't know. It's your call, man. This is it's your show.
Yeah.
Whatever you want to do.
Okay, perfect. Okay, so let's get started.
Yeah.
So first off, Andy, you're gonna have to say the pronunciation of your last name.
Yeah. It's Plokhii.
Plokhii,
Yeah.
Ukrainian.
Yeah.
And how do you spell that?
Plohy.
Okay. So we're going to talk about crypto investments and that kind of stuff. It's really interesting to me. Obviously, you're a proponent of the cryptocurrency and Bitcoin. We talked about Bitcoin before. So what's going on? You've been doing this for a while now. You came from where? Oil field, bean counter.
Yeah. No beans. But spend some time in the energy industry. Spend some time in the capital markets industry. Raising funds, advising on some M&A, and just working in investments generally in kind of any role I've had, whether it's corporate or in capital markets. So always looking at investments and advising, whether it's corporations or investors on what's going on, and running the numbers and kind of trying to make sense of the opportunities out there.
So what attracted you? Like you left the corporate world to dive into cryptocurrency, like a lot of people did.
Yeah. I mean, I've been in really attracted to crypto since 17. Really got in around there, heard about it in 13 and then really got in 17, kind of went down the rabbit hole over that summer. And then, that was the last, well, not the last bull. This bull just ended, sadly. We're in a big bear now, but that was the 17 bull. And I just got into it and it was when I came out, it was this is the next thing. And I need to know a lot more and participate in this. And then, that bull turned into a bear and I stayed in and, didn't look away too much, but, bears are pretty boring and it was pretty boring around that time. So, didn't spend a lot of time researching anything new, but, I've still stayed in, kind of different types of investment roles, throughout and still currently. So, crypto's kind of my personal thing. It's where I like to spend a lot of my personal energy. I'm more into the macro side of things too now. So I wouldn't say I'm just a crypto only investor. I'd say I'm just a macro investor, looking for opportunities wherever they may be. That could be alternative assets. That could be traditional assets like stocks. It's just that the most fascinating stuff's been going on in crypto. And so that's where I just can't, step away from, over the last couple of years, kind of since COVID kicked off.
Okay. So just to provide context, you used to analyze companies for acquisitions for bigger companies to purchase, right?
Yeah, all kinds of stuff. That's one of the things I used to do. Yeah.
So obviously you have a good sense of value of things and businesses that are valued. How do you look at a typical cryptocurrency, a typical coin, compared to a business? What do you analyze when you look at that?
Yeah, and just to clear things up, also is I gotta say I'm not a financial advisor, right? I'm not.
Disclaimer.
And this is not financial advice, right? So this is just what I do, with my personal funds right now. And again, everyone needs to do their own research. And no matter what, everything I say here is just my own opinion and for entertainment and for fun, right? So you got to do your own homework, as always, right? But yeah, I've done all types of investing, whether it's fundamentals, you study companies bottom up, you study their financials, you study the markets, you study their competitors, super deep in the trenches, bottom up analysis of companies and modeling and stuff of all their earnings and forecasts and all that. as well as technical analysis. Been there, done that. That was really into that kind of back in the day when I was first, coming out of school. Done, trend following. So that's a whole other type of trading. So I've been, I've researched, I've done a lot of different types of strategies, and crypto is very different from all of them because it's not fundamentals. I mean, yeah, a lot of guys do technical analysis, and I don't know. I don't think it really works a lot of the time, right? It could tell you about certain moves, but technical analysis isn't too high in my books, especially in crypto. So yeah, it's a completely different animal from, and it's so big now. Before when we say crypto, it used to be like Bitcoin. Then it was like Bitcoin and Ethereum, and now crypto is really, when we say crypto, it's like the coins like Bitcoin, Ethereum, and the other ones, maybe like Solana and stuff like that. But now the term is Web3, right? So Web3 is kind of this new term to encapsulate what crypto is today. So it's evolved into this asset class, which is Web3, which is basically kind of like the next internet. And Web3 is built on blockchains. Web3 is built on Ethereum primarily and others. So crypto is, crypto plus everything that's happened since, like NFTs and DeFi, all of that is Web3. And so that is, completely different from stocks and studying companies and trying to like figure out, earnings and all that.
Let's go NFTs. This is always a weird,
Awesome.
a weird one for me. That people are buying. And so we've been seeing people purchase monkeys and stuff like that for a good, how long has this been going on? When did like Bored Ape come around?
Yeah.
And what are they buying, and what have you seen since the beginning, for example, when people started going crazy over it? And is it still maintaining?
Yeah. Well, they're apes, first of all, right?
Yeah.
So yeah, I mean, yeah. So, I really just fell into NFTs last like summer, like 21 summer, a bit late, kind of September. I kind of saw the apes kind of in August, Bored Apes, and then, the mutants came out end of August, and then, I shortly thereafter got into it through a mutant. And, that was fascinating. When I first saw that, like, I didn't really follow what was going on in NFTs or OpenSea or like, these crypto kitties and like all this other stuff. Kind of, there was a big pump in March of 21, like big NFT pump, and like everybody was talking about NFTs. I think Elon Musk might have done like an NFT thing on SNL. So I got into it after that, and this was kind of when it was like the next wave. And Bored Apes were kind of the first big blue chip, and they're still the biggest. They're the biggest collection, most popular collection. Them and CryptoPunks. So there's a lot to say on the topic, but. Yeah, they're the number one blue chip. It's Yuga Labs is kind of the the masterminds behind this, and so they put out this. They're also behind another project called Other Side, which is a metaverse and a meta RPG game. So and they purchased the CryptoPunks, which was actually the OG collection on Ethereum. It came out like 17. These things traded for nothing, and then last summer they really picked up. So Bored Apes today, I think the cheapest one's like 85 ETH. ETH's like, 1350 US, right? So it's like 130K or something US. So Canadian, 175, close to 200,000. So it's a crazy number, right? And so when I first saw that, it was probably at about maybe 25, 30 ETH, Bored Apes, like September 21, and Mutants just came out, they were like 4 ETH. And I couldn't understand it, right? And so too many times I've been burned by just like scoffing at things you don't understand. And at first, like with Bitcoin, right? Like in 2013, I didn't understand it, and I just like dismissed it. Ethereum, I dismissed it, right? And so I've been burned too many times by seeing something that other people find valuable, and just because I don't understand it, I let it go. I decided to stop doing that. So I actually like dug in right away. And I mean, it still took me a while because I first heard of apes probably in like July, but I didn't look at it till August. So that was huge, to understand why a JPEG is worth, at that time, 20, 30, actually, I think it was more, they were like 25. So, they're probably worth like 75K, right? Cause Ethereum was like, 2,500 and then you got 25 ETH on a Bored Ape. So 75K US for a Bored Ape, for a JPEG. Like, what is that, right? For me, that's coming from, fundamentals, stocks, like looking at, earnings. And this is an anonymous team and this JPEG's trading for 75K. So that was crazy. I had to go, down the rabbit hole pretty deep to understand that. I created my own framework, how to look at NFTs. And so like, I've been using that since. So it's just been a wild ride. We're in October now. It's October 3rd. It's been about a year, just over a year since I've been in NFTs, and it's been the most intense, the most fascinating time, I've had in markets in general. And, I love markets, and Web3 is just a whole new market. It's completely different. It's like a traditional market on steroids in terms of how dynamic it is.
So what do you do with these JPEGs?
Yeah.
Right. Other than post them on your Twitter and brag that you have it, right?
Yeah. Well, you get some swag, like this, right? And you wear it to your buddy's place and do podcasts. So yeah, I mean, there's so much there.
But why are people buying them? What is as an investment?
Totally. So, number one is this like digital identity, right? For these 10K collections, like CryptoPunks were the first. There's 10,000 of them. Bored Apes followed the playbook. There's many others. There's literally like thousands of NFTs that have come out, and a lot of them are these 10K collections. So it's the popular like PFP collection. PFP is profile picture. So, crypto Twitter is a big thing, and now it's kind of like NFT Twitter. And if you're on there, or if you're in Discord, and other social platforms, you need an avatar, and your avatar can be this PFP, and so it's a digital flex, right? It's social proof. So
100%.
if you have that, how do you flex in the digital world? Like you can't, right? Like you don't, you can show your picture, but like not a lot of people like to flex with their normal face, right? They like to buy things. They like to buy houses
or filter it. Yeah.
Yeah. Yeah. They like but still, sometimes you still can't do much with it, right? It's just you. So you buy things, right? Like you buy cars and clothes and watches and like other things, right? You buy art, but like, how do you flex in the digital world? And so this PFP is like the first digital flex, right? Having that gives you respect. So having a Bored Ape, people want to listen to you. People are like, wow, this person can afford this. They can listen to you. So right or wrong, this is just what's happening, right? Like, I'm not saying this is the way of the future and this is great. This is just, I'm looking at what's going on in the world, right? And so people flex in the physical world. People are flexing in the digital world. This is the way to do it, right? So the flex is important. And because originally when NFTs came out, like I tried to understand what it was all about, right? And this flex was the biggest thing. The next thing was this, it seemed like there was the brand that was being developed, right? So like in the Bored Apes, it's the Bored Ape Yacht Club. This is a brand that's being slowly developed, and you could see more and more people were like hopping onto it. Shortly after, like in the fall of 21, after Mutants came out, there was a bunch of apes that were auctioned at Christie's for like millions of dollars. So when something like that happens, this is like crystallized in history as a valuable asset. So like, you don't just have something that trades for millions of dollars and then goes to zero. So this was important in terms of building up the brand, the lore behind what the club and what the brand will become. So NFTs don't give you like the rights to like earnings, future earnings. It's not like a stock. It doesn't give you, you don't own any of the company, but you do own a piece of the brand. And so with the apes, so one is you own a piece of the brand, because you have one of these original, verifiable pieces of the brand in your PFP. So you have an ape that's part of the collection, right? So you got digital flex, you have this piece of a brand that as brands get bigger, imagine you own a piece of like Louis Vuitton or Gucci. The brand is different from the company, So that brand value is something. Now it's not.
But if you're talking Louis Vuitton, you're talking about owning a bag from Louis Vuitton, not owning a stock from Louis Vuitton.
No, not just a bag. Like, let's say Louis Vuitton, the brand, like, had ownership. This is like owning the brand, not just a bag. Like, a bag is just a piece of merchandise with a logo. That's not, I mean, that's still worth a lot, but it's not as popular as, because you can make infinite bags, right? You can't make infinite apes. And so imagine Louis had a PFP collection that literally represented the value of the brand. Like, that would grow with the brand. So it's the brand value. And so as this brand grows, in theory, your piece of this brand would grow too. And this is why, because you have IP rights too. So the apes were basically the first to say, look, you have intellectual property rights to to your PFP. So you can go and start a company. You could go start like a drinks company. And a bunch of companies have been started. There was a restaurant called Bored and Hungry. That's, I think, in like California, maybe somewhere else. But they're using the ape that they have as the logo. And they have full artistic commercial rights to use that. And now they're associated with the Bored Ape Yacht Club, right? Everybody knows. And so they get to leverage that brand equity. And so the more popular the club becomes, this brand of Bored Ape Yacht Club, the more popular they're going to become and the more people are going to know about them. So it's like this advertising. So that's huge. And then there's this whole like network effect, right? So like the reason, in the digital world, digital age, network effect is everything, right? Like that's why Facebook blew up as fast as it did. That's why the internet blew up as fast as it did. That's why Ethereum and Bitcoin are blowing up and NFTs are blowing up, because of network effect. So with digital technology, and networks, everything goes viral, right? Like things just go viral on YouTube and on the internet, and people find out really quickly, and everybody jumps on. And so it's interesting, actually. There's curves that compare the growth of, let's say, Web3, which is basically Ethereum addresses, to internet users. And it is exactly the same. It is following. So there's a chart that overlays from like the 90s internet growth to like 2010, and it overlays it with Ethereum addresses starting in like 2014 to today. We're in like 1997 right now. So I don't know if you remember what happened. I don't, but we can look to history. 97 to 2000, everything went crazy, right? Because network effects, came in, users skyrocketed for the internet. And as Web3 onboards more users, these original projects are actually going to grow in value. So there's more to this valuation, but originally that's how I was thinking about it.
So you're talking about the tech bubble in the 90s, and but where's the bubble? Has it stopped growing at this moment?
The bubble, which one?
Of NFTs, crypto, the whole 9 yards.
Yeah. There are many bubbles like in history, right? And usually like bubbles are something that just happens and then it just dies forever, right? So like there's this tulip mania bubble, which is apparently like historically actually inaccurate, but we look at it and we've put together the narrative that it was a bubble and everybody was crazy, which is actually different. But there's this, I think the Mississippi company, there's the South Sea bubble. So there's these bubbles where like things just skyrocket and then they crash forever, right? And there's histories like littered with them. Stock markets go through bubbles, right? It doesn't mean that they die.
Real estate goes through bubbles.
Yeah. So like there's natural bubbles in markets, and that's just fueled by because who's the participant? It's people, right? So we have our fear and greed, our animal instincts, which drive everything. So it doesn't matter what age, it doesn't matter if this was 2,000 years ago or in 2,000 years. If people are the participants, we are emotional creatures, and we're going to be fearful. We're going to be greedy. We're going to act on circumstances that are around us. And bubbles are going to happen, right? And bubbles just happen when people get, too greedy. Things, things basically just pump extremely fast because everybody kind of finds out, gets in, and wants to make a lot of money, and FOMO effect kicks in, right? So we've gone through lots of bubbles in stocks and crypto. It kind of goes in 4-year cycles. It has been with Bitcoin since 2009. And, we've been through like 4 or 5 bubbles now. And, each one kind of corrects. And then there's this bear market, and then there's this accumulation, and then we pump again. So, last time we talked was a long time ago. Last time we talked was November. I think it was actually like late October 2021. And Bitcoin was like $64,000 US. And, I was like, it's going to the moon, it's going to like 100 plus. And then we saw it top out at like 69.
Yeah, we talked right near the top.
Yeah. And looking back to it, I could be like, oh, we were so euphoric. I was so euphoric. Like, even if you look back to that video, right? Like, just go look at it and like listen to me and like look at my face and like that's euphoria. That's when that's when you're probably close to the top.
Get scared, yeah.
Yeah. And like at the time though, you never know that you're in it. You never know when you're in a bubble. So like I've been trying to really think differently about that and try to like understand like how will I know next time, like, what is euphoria? Like what is like complete, desperation when you're in a bear. So right now, we corrected, like we've been crashing since basically we talked, since like November 8th, we've been crashing in stocks and in crypto. And it's really fueled by this like rate tightening, rate hikes and quantitative tightening by the Fed and all these other central banks, which is interesting actually, because on the macro side, we can get into that later if you want, but I saw today that the UN and IMF have actually urged the Fed and all the central banks to stop increasing interest rates. So, and this isn't just like somebody saying, please stop. This is real. This could actually have an impact. And things are starting to break. So we could see that come to an end. But this whole like correction started with like the Fed starting to increase rates or signaling that they will in November and then starting to like shortly thereafter. So we have been through probably a couple NFT bubbles already. Maybe one in like March of last year, and then January of this year was a pretty good one. Everything pumped pretty hard, and NFTs trade differently than stocks or Ethereum or Bitcoin or like other crypto. A lot of the time they kind of do their own thing. Sometimes they're correlated, sometimes they're not. I think NFTs actually peaked in probably around the other side Meta land sale, which I participated in. It was a crazy time. Gas fees were like $10,000 just to mint, this land, that other side, and you have to buy this land from other side Meta, which is the metaverse, Yuga Labs' metaverse. That was probably the peak, and like some people were calling it the peak, and I was just in times of euphoria, you're like, no, this is just what adoption looks like. This is just people realizing this is the next thing, and now they're jumping on, and we have a long way to go. But around early May, like NFTs, like all the blue chips at least, peaked, and they've been coming off since. Even though like the market, crypto, Ethereum was coming off. So right now we're pretty dead. We could have bottomed in September maybe for NFTs. I sure hope so, but we're definitely not in a bubble right now. Anybody who wanted to escape and, doesn't want to be a part of it is out. It's super quiet in Web3 and Twitter right now. This is, I don't know a lot, but I know right now is not a peak.
Yeah, of course. And then, so if you look at, for example, I thought crypto was to kind of go against inflation. Crypto was, and it seems like with the stock market, down goes crypto, not the opposite. I thought it like as the stock market goes down, people are going to invest in crypto, or is it just wealth and capital, and people have less capital, people have less wealth, people don't want to invest in anything, and they're not diversified through. Like what is it about crypto that follows the stock market?
So why does crypto follow the market like right now? Like why is it kind of tracking the NASDAQ
Totally.
kind of thing?
Yeah.
Yeah. So, I mean, in times of like massive macro, contagion or very important macro moves like happening today, which is the big macro move today is the Federal Reserve tightening, increasing interest rates, forcing the rest of the world to also increase interest rate because everything revolves around the U.S. dollar. U.S. dollar has, last time it was this strong was like 2002, and before that was like 1974, or maybe 84, one of the two. So it's one of the strongest periods in the history of the U.S. dollar, and it's causing a lot of things to break. every risk asset, which is every perceived risk asset, is coming off. Every asset is coming off, but also every perceived risk asset is coming off harder. Perceived risk assets are, really like growth tech stocks, right? Tesla and like a lot of others that actually have like no earnings, and it's all kind of baked in the future, like Peloton and, Zoom and like all these others, like Shopify, like where their valuations are literally on like earnings in 10 years from now. That's like what they're trading on. So these guys get hit super hard for a bunch of different reasons when rates increase. One of the reasons is just people get scared. They're just like, man, I want to own something that actually generates some revenue or some earnings. So they get scared. So risk off, number one. Number two, these cash flows of the future are discounted at higher rates to today. So technically present value of the company's lower, fundamental stuff. Another reason is, their costs are a lot higher today because, they're not necessarily passing on the revenue, the earnings, this inflation, these higher rates, not passing on to consumers in the tech business, really. So their costs are higher, they can't raise money. So maybe some of these guys go bankrupt. So that's tough. So there's potential financing risk. They have to refinance some of their debt at super high rates. That could crush them. There's other reasons why these guys come off, but that's I think I listed like 5 there. So crypto is perceived as a risk asset. In times of uncertainty, people want to run away. Right now, everyone's running to the dollar. They're running to the US dollar. So not only is crypto selling off, but bonds are selling off, right? Like all this fixed income selling off. Gold is selling off. Like literally every single asset, including real estate, has sold off because people are just chasing dollars right now because everyone's super freaked out. The sentiment right now is like the most bearish it's been in, maybe 1, 2, 3 times in history we've been this bearish in terms of, about markets, about risk taking. So right now, everyone is scared. Right now, everybody wants to own zero risk. Right now, everybody that was thinking of like the potential and their imagination of these companies, what they could be, is like, this is worthless. They produce no money. So the outlook has just changed, and we've done it ourselves as people. Like right now, because we're fearful, we see the worst, right? We're scared. We want to run. We don't see the potential. We don't see what could be. We don't want to take that risk.
It's almost like you don't want to get going on the way up until everybody else does, right? And then they jump on board.
That's right. That's what we do, right? As human beings, like we wait until things are going up, and it feels good to buy, right? And here's what I've learned is you want to do what feels bad. You want to do what really makes you sick, right? And what makes you sick is to sell in a pumping market. What makes you sick is to sell on an all-time high. I want to buy at an all-time high. I want to buy everything I can, right? Like when Bitcoin was 64, 69, I was like, how do I get more? Like this thing will never stop going up. And right now, like at the most fearful time, guess what? Nobody is thinking about how do I buy Bitcoin. Mm-hmm. I had so many friends, asking me about it, getting in, and like, this is at the all-time high, right? And it's a cliche, but it's true. It's like when your, Uber driver or whatever starts talking about, your hairdresser starts talking about, whatever asset it is, whatever stock it is, like that we've peaked. Like that's, we're close to the top.
The pump and dump. Yeah. Get out.
It's time to get out. When people are like laughing at this asset, like right now, people are laughing at NFTs. How many headlines have been out there? It's like NFTs are dead. Crypto's dead. Bitcoin's been declared dead probably about 700 times in its life. Right. I think risk assets, tech stocks, like everything that anyone talks about is like, everyone's like, we're going to be in a bear market for 3 years. The 20s are like a lost decade. This is a depression era, like the 30s. Stocks won't recover for 10 years. Like everything I see is like massive fear. And that's when you know that this stuff is priced in. Like markets price in all of this. So right now, what we see prices in crypto, in stocks, in other assets, is literally the most fearful that human beings have been in the history of markets, like 1 or 3 times. So risk adjusted, like I like to take bets that have asymmetric risk reward, right? Right now would be an asymmetric risk reward, meaning that the risk is very low because the worst, case scenarios are priced into the market. And so there's massive potential for the upside because the worst is priced in. It doesn't even matter what happens because we've priced in the worst. So even if the worst happens, things don't even move from here because we've already priced them in, right? So to kind of come back around to, crypto and stuff coming down with stocks, they're perceived as risk assets right now. So Ethereum, Bitcoin just basically trade with the NASDAQ. There could have been some potential decoupling in the last couple of weeks. We'll see if that follows through. We are in October. This is, kind of deemed Uptober. So, some interesting stats is this has been the worst start to the year for stocks since 2002 and I believe 1974. Worst start to the year. And those...
Not even 2008.
No.
Wow.
Yeah. And I'm not saying because 2008 ended really bad.
Yeah.
It wasn't as bad up until now, but worst start to the year. I think through September, and we actually bottomed in early October in 2002 and 1974. So we are in October 3rd here. Who knows if we bottomed or not? We could have. A lot depends on the Fed here. And if things turn, you could see everything turn. And this tightening cycle, like this rate hike cycle, has wiped out, I think it's about $80 trillion from global assets already. Most of that's in bonds. But from like stock markets, this is just stocks and bonds. $80 trillion globally is what's been wiped out. So it's already been devastating, right? So, I mean, crypto's kind of a nothing, it's a drop here at, less than $1 trillion market cap right now, right? Like Bitcoin's like 370, Ethereum's like 150. We're tiny, right? So like, yeah, Bitcoin's down massive, 70%, maybe Ethereum's down like 75% and stocks are down, 30%, but this can all churn. And the thing is, it might all churn together. There is also potential for crypto to decouple, but I don't know if it's there yet. I think it'll just go along with it. I do want to touch on your point. You were talking about, inflation hedge for Bitcoin, and how it's supposed to be this inflation hedge. And, people are like, well, inflation's, 10%. Why is Bitcoin dropping? I thought it's supposed to pump when inflation goes up. And so here's the thing. I think there's a misunderstanding. It's Bitcoin is a long-term inflation hedge. Long-term inflation is measured in monetary debasement. Now, monetary debasement is the global money supply, right? And how much there is out there, and basically the change year over year, the percentage change. So there's actually really awesome charts out there that show Bitcoin price compared to monetary, percent change year over year, and it actually follows exactly. So right now, and since November, there's, global balance sheets have like collapsed. Basically, they've in this tightening, they've taken so much off their balance sheets. They're selling all this debt off their balance sheets. They're increasing rates. And so we're actually in a monetary tightening. In a monetary tightening, Bitcoin also tightens. So it's just doing what it's supposed to do, actually. This inflation we're seeing is actually just has a lag, right? It's showing you what happened a year ago. And a year ago, Bitcoin pumped because there was so much money being printed. All that money that is being printed is now, making its way around, and we're seeing inflation. So it is actually a great monetary debasement hedge. And so is any other asset that is actually limited and finite. And Ethereum has actually just became limited and finite, and even more so than Bitcoin. We had the merge earlier in September. Ethereum is actually now deflationary in certain days, and in the long term will be deflationary. So there's about 121 million Ethereum right now, and there's probably going to be a lot less in the future. There's 21 million Bitcoin that'll ever exist. We're not there yet, but we know we're going to get to 21. Ethereum, you could actually maybe even go half to 50 million. If Ethereum is really successful, we're going to be burning a lot of Ether in the future. And that's actually going to decrease the amount of supply And we don't see that in this world where we have finite assets, right? Everything is infinite, especially in this fiat currency world. So these assets actually act very well as monetary debasement hedges, especially Bitcoin, because that's what its only purpose is. What do you think, dude?
It's perfect.
Yeah? Good?
Yeah.
Am I going too long sometimes?
Oh, no.
Okay.
I'll stop you. Okay. So let's hope that we're creating a tradition. We timed the peak of the market basically last year. So let's hope we time the bottom of the market this year. So
Oh man, that would be something. Hey,
yeah,
I love it.
we'll take it out. We'll take it up.
Yeah.
So last year we were talking about Bitcoin and why it was so amazing and its growth potential and why it had so much growth potential. Let's talk about the difference in it right now. You don't have, I think you touched on it earlier, maids and hairdressers and Uber drivers telling you to get into Bitcoin. All those people are gone. Those people got their money out. Nobody's sitting long term.
Yeah.
Somebody who put in $2,000 and thought that it was going to go to 200,000.
They're out.
They're out. Yeah. So what is the benefit right now? What's the upside of Bitcoin? What do you see it doing? What do you see as far as people utilizing it to buy stuff? We talked last time Elon was going to accept Bitcoin or Ethereum. Did that ever go through or no?
No, like he was such a disappointment actually. He's, I don't blame him. He hasn't sold anything personally. So I think his only investment outside of Tesla and SpaceX is Bitcoin. And he's got some Doge. So I'm a bit sad he doesn't know Ethereum. That's kind of, I think he'll come around. But so personally, he's got diamond hands. Like he understands. Tesla ended up getting a lot of pressure from, the ESG crowd on Bitcoin's emissions, energy consumption, and ultimately had to, succumb to that pressure, had to offload a bunch of Bitcoin. They couldn't accept it or they stopped accepting it. They sold off a bunch of it. And I think it was just to manage some earnings because they had to, they weren't making enough earnings kind of to meet expectations, selling their cars. So they sold a bunch of Bitcoin and kind of declared that as part of their earnings and to make Wall Street happy. So they sold a bunch, which was, didn't come off too well. Wasn't received too well by the market. Bitcoin kind of crashed a bit. They got a bunch of flack. So, that's Elon's venture. So they still have some though, and Bitcoin's fundamentals are seriously just only getting stronger every single day, and like nobody cares right now because we're in this bear. And in bear markets, like good news don't matter. The thing is though, all these good news get priced in so fast when we turn into a bull. Like it's almost like that's why you see the pump, and that's why we could go like 3x, 5x in like months. Because everything that has happened over the last year, which is all fundamentally positive in the face of a crashing price, gets priced in super fast when people decide to actually think about it and be like, wow, this is actually incredible what's happened. This network is massive. It's only gotten stronger. It's only gotten better. The wallets are increasing. The hash rate is an all-time high, meaning security is an all-time high for Bitcoin. Adoption is an all-time high. Like everything is just all-time high except for price. And it's because we're in a bear. So the price does not reflect the actual asset. It does not reflect the future of this asset, nor the present. So
speculation or where's the price come from on Bitcoin specifically?
Well, right now it's just trading as this risk asset, right? So it is like the most liquid asset out there, right? It trades 24/7. There's a lot of depth in the market. So it's used right now as a financial instrument to hedge against just equities and so it's used by a lot of professional investors as a hedging mechanism because right now it's very reactionary and it reacts first before stocks, before anything else to the macro. And it's trading like a risk asset, right? So it's basically just the most liquid, deep risk asset that's there. And it's used as a proxy for stocks. For U.S. stocks primarily. And And it will decouple from that at some point when it's bigger. It's not there yet. It's still too small. At some point, it will decouple, and it will not trade as this risk asset. It'll actually trade as what it is, a great store of value, which is actually a network of money, a network of stored wealth. Bitcoin, I think we've seen the lows. We probably dipped. I think it was like maybe 18,000, over the summer here.
What's it at now?
I think we're at like 19.6, 19.7, just under 20K, which is an important price level. Like that's where we peaked in 2017, is around 20K. Back in during COVID, like the last bear, 19, 20, or more like 18, 19, 20. We danced at like 3.5K, right? Like that was, I think that's the 20K. Like the 20K is the new 3.5K. And we've just spent so much time there, like at this 20K level.
Is it because a whole bunch of people are invested at that point?
Exactly. Exactly. Like that's where a lot of money's traded hands. And like below that, like most people would be in a loss. And so like people don't like to sell when they're in a loss, especially like long-term serious investors like hodlers, diamond-handed folks that believe in Bitcoin. No one's really trying to sell. Like, if it's like at all-time highs, people are like, yeah, I've rode this out. Like I'm going to take a bit of chips off the table here. No one's trying to sell here. So I think that's why we see a lot of strength and like whomever is selling. I don't know who is selling here. I mean, miners still have to sell to fuel their rigs, but I don't know who else is selling. Like there's nothing left to sell. Whoever had to sell, like we've been through so much this summer. We had this massive contagion, like a crypto contagion, like a Lehman moment of 2008 in the financial markets. We had it in May and June of this year where Terra Luna collapsed, and that was insane. Also, Three Arrows Capital collapsed, like Celsius collapsed. Like it was just the craziest time. And so everybody that had to sell, like that was forced to sell, has been washed out. So I don't know who else would be left in this market that wants to sell that has not already sold. So the upside, I think we're typically in the last bear markets, it's taken us about a year, call it 10 months to a year, to bottom. We're about 11 months into this bear from November 8th. So I think we've already bottomed. I think we saw the bottom. If we haven't, maybe we see an insane wick down at 10K here. If something blows up macro wise, like this month, we see an insane wick to 10K, and then that's the bottom, and that would be crazy, but possible. So I wouldn't be saying that cannot happen. So maybe we go half from here, which would be shocking, but I think that would be the bottom. So in the next month or two here, I think it's the bottom, but I'm more bullish right now than thinking we might see this 10K wick. So I just think there's a lot of depth in the market, and everybody would be picking it up a lot cheaper than that, or a lot higher than that. So I think we've bottomed. I think macro is going to drive this. So I think the Fed and central banks are going to pivot. We saw the Bank of England pivot. The pound was just crashing a couple of weeks ago. It was like $1.03 US. Have never seen that literally in the history of the pound and the US dollar, that relationship. So it's bounced back a little bit now, but that's because Bank of England has started to do quantitative easing again. So they tried to do tightening like everyone else, and they're like, fuck it, that didn't work. So our currency is literally collapsing. So now they're doing easing. They're controlling the curve in terms of their treasuries. They're buying them up again. The pounds are covered. So they've now started to manage the pound. They've started to manage their market. Bank of Japan's still buying equities. That's why their market hasn't really crashed like their other markets, because their central bank buys equities. So I think a pivot is the next move, and I think we're closer than further. And I've been very carefully watching inflation and studying inflation, and how it's understood and followed. And I think we're going to get lower inflation month over month coming up here very fast. And I think by, as early as January or February, we're going to get maybe even negative inflation.
Do you think that's because of the interest rates rising, or what do you see as far as when you look at Bitcoin on like the candles? Do you analyze it like that and like you would a normal stock? And what do you see if you look at it, let's say past year, past 5 years, stuff like that?
Yeah, two different questions there. I'll just hit the first one there, and then follow up with the second. But yeah, I mean, inflation. Here's the thing: like, it's primarily been fueled. It's not really by all this printing that happened. Actually, like everyone thinks that just people printed all this money, and now milk costs $3 more than what it did like last fall. The biggest thing is actually COVID supply chains, right? So like COVID, like supply chains really caused massive inflation, right? And that's in terms of like all kinds of goods for everything, right? So that's huge. Number one there. Number two, we had massive underproduction in oil and gas during COVID because demand dropped off, and it takes a long time to kick these things back up. So we saw production come back up pretty late. So that's why we saw an increase in commodity prices. Specifically, fossil fuel related commodities. So fossil fuel related commodities plus supply chains started pumping inflation last year into the fall and into winter. Then we had this war in Ukraine, right? This Russia's war on Ukraine. So that caused a massive spike in, again, oil, gas, because they're massive exporters of those, massive consumers, producers. As well as wheat and barley and all these other food consumables that started to increase in terms of pricing because of tariffs and export bans and things like that, and import bans. So we have this war, right? So we have some impact from all this printing. It's not all of it. We have some. We have impact from production, lack of production, that now consumers were driving more than ever, flying more than ever, consuming more than ever in terms of fossil fuels, fossil fuel energy. And then we had this war, and then we had so all four of those combined to basically pump inflation to insane levels, which we've really never seen since like I think the 80s, right? So I think it's pretty artificial, right? And this all really kind of the key things with inflation, like, and I'm talking US because right now nothing else matters except for US, right? The Fed, and it's watching US inflation, the CPI, consumer price index. What drives the CPI is basically fossil fuel energy, natural gas, heating oil, gasoline, because that drives the price of food, and so as well as housing, right? So like rents. And housing pumped because everybody wanted a house at the same time, and all these commodities were sky high, right? So like the price of these houses to build is actually far more expensive. Also, you have this zero interest rates. People can lock in 3% in the US for 30-year mortgages, 2%. Never seen that before. And people just, can now move out beyond their little apartments in San Francisco and get a house. So this perfect storm of demand for housing increase the value of all these housing, increase the value of rents, right? People like want to just go and get away from whoever they just spent the last 2 years locked up for COVID with. And, people are getting divorced, and, you got tons of demand. And so the biggest things that drive inflation are housing equivalent rents, basically, or owner equivalent rents. And then you have fossil fuel prices, as well as food prices. These three buckets have been the most artificially jacked outside of this, printing that I just talked about by these other three categories: the war, underproduction in fossil fuels, and the supply chain constraints due to COVID. This all of these things really started pumping last fall. And by about January, they probably reached their peaks. So January of this year of 22, you already had oil that was like at $80 or so. You had natural gas that was like $5 or $6 per MMBTU, or per MCF. You also had rents that were massive, that already people paid tons of money for their houses. Like all this was baked in, and food was already sky high. And so the thing with inflation is it actually only matters what happened that month a year ago. It doesn't matter where we started. So it doesn't matter that like milk next year could be a lot more expensive than it was 5 years ago. All that matters is what's the price of milk that month next year versus, that month this year. So we're actually at this point where, because prices were already so high and we've been coming off, like oil, it was like, under $80. It pumped a little bit just recently, but it was like 77, about a week ago, and maybe 83 now. Natural gas is collapsing, and it's going to collapse further into the winter. It's like under $6, I think. These observed rents, Zillow observed rents index is crashing. Lumber, every single commodity, shipping rates, from China to the U.S. Are below COVID levels. So all of these things, all of these supply chain constraints are gone. Prices have come back down to earth, and we're going to start to see this, I think, as soon as like January. So that's why inflation can actually come down very much to that 2%, 3% range the Fed wants. And actually, I could see it going negative in Q1 slash Q2 of 2023, especially because right now the biggest thing that's driving this drop in inflation is the rate cycle, is these increased rates. Who's getting mortgages today? Nobody, right? No one's getting them because rates are too high. No one's locking in here. Everyone's scared. Nobody wants to buy anything. Again, risk averse, right? Rates are so high. People's, debt costs are super high. Their mortgage costs are super high. They're paying so much money for, these food bills and other items. So people are going to be laid off. Like this rate cycle is going to be pretty bad. It's going to cause some serious destruction in the economy, and people are preparing for that. So this is a demand side impact. And so when you have a demand side impact, when you still have all this supply out there in terms of oil and gas and all these goods, like everyone's dropping prices. Like Apple, I think, is going to have to drop prices right away. I think Nike's is, dropping prices of all their inventory. Walmart's got to drop all these prices. All these guys stocked up, and now there's nobody there to buy it. So we're going to see massive deflation. And, I'm not the only voice on this, with this view. So that's a big one. And I just want to come around to your candlesticks on Bitcoin if you still want to talk about it.
Yeah. Yeah, you went off on a little tangent there.
Yeah, I think you can tell I'm very passionate about inflation and kind of my view on that. I think it's really interesting because that is literally like what drives everything right now.
Okay, but before we go to the candlesticks, I want to talk about a little bit about inflation. We're already seeing, I sit in a bunch of masterminds in the United States. We're already seeing prices drop in a lot of the major cities down there. Interest rates are significantly higher. They're a little different than us. They get the, a 30-year mortgage where we get a 3-year, 5-year term. So it makes a huge difference when you get a 2% at 30 years versus a 2% on a 5-year term here. So with the interest rates going up down there and the prices coming down a bit, is that, because you just talked about how that affects inflation, do you feel like that's going to have a significant effect or just one piece of the puzzle for bringing inflation down?
So, housing is very important. It's like 33% of the CPI basket, and about probably 50% is all fossil fuel related. Kind of, it's basically food, and like one of the biggest costs in food is transportation. So
how does a carbon tax come into play?
Carbon tax. So
not to get on a Canadian debate here, but how does a carbon tax? I feel like a lot of people are using it as a scapegoat. Inflation, well, carbon tax is. It's the talking point in Canada, right? So how do you think that the carbon tax is actually affecting inflation? Because obviously, with the carbon tax, the stuff has to get to market, has to go on planes, has to go on trains and in trucks. So obviously that has an effect on inflation. But how do you feel like it's really affected inflation here in Canada, at least?
Yeah, good question. I don't spend a lot of time thinking about carbon tax. I don't think it's a really, going to move any needles on this like larger topic here of kind of what's going on macro wise. But, so we're paying, in Canada, we're paying a bit more for basically our usage of gasoline, natural gas. We see it in our prices of food and things, right, that use natural gas and oil. fossil fuels to produce them, right? Like it's all baked in, these carbon taxes. So actually, saw the other day that EPCOR or the government is actually going to be subsidizing natural gas prices like this winter or something. So I thought that was interesting.
The Alberta government, yeah.
Yeah, so that's great for
The
us.
3
here.
coldest months or something.
Yeah. So that's phenomenal. So, I mean, does carbon tax lead to inflation? Maybe a little bit for sure. I mean, we're increasing the price of goods because of this arbitrary tax we choose to pay. I mean, we don't choose, but, we've been told we must pay this by kind of the federal government. So we're doing that. And so that definitely contributes to inflation. But again, inflation is really all about year over year, right? So I think we've had a carbon tax for a little while now, right? For at least a couple of years, maybe. I don't know if it's increased recently. I haven't followed that. But, if it increases substantially, that could increase the price of goods and the price of energy in Canada. But again, what's going on in Canada doesn't matter for the world. So what doesn't matter for the US? So like, I don't look at things as like a Canadian investor. Like I look at things as a global investor. And what is driving everything right now is not Canadian inflation or Canadian real estate, even though Canada is one of the markets that's had like probably the hottest real estate market and like is probably going to see some pain. I think I saw some article like Canada, New Zealand, and like Australia had like the hottest markets. And like, of course, Canada, we're talking about like Vancouver and Toronto. And so we're already seeing tremendous corrections in those markets, especially like New Zealand and Australia, because they just had huge run-ups, right? And so, of course, the bigger the pump, the bigger the dump, we're going to see bigger corrections. Again, these kind of like animal greed and fear instincts come into play, and we've seen a lot of that in Toronto and Vancouver. And I mean, they've been very resilient in the past. We'll see what happens here, but yeah, it's really all about the Fed and the US CPI is the driver here, and they don't have a carbon tax, so
yeah, exactly. And so let's stay on that topic a little bit. So the bigger the pump, the bigger the dump. So like, is the best thing for crypto that it goes up slowly?
No, it's not. I think the pump is very important for adoption. The pump drives adoption, right? So like, what the price really reflects that awareness, right? So like, something interesting I've been doing is you go to Google Trends and like you put in like a term and you could see like how popular that term's been in a certain period of time, like whether it's like days or years. And it actually it's really meaningful. You could do this with any asset. I like to do it with NFTs. I like to do it with crypto. And just shows you how much, and you could do it regionally or like globally, and it shows you how much the world is obsessed with or paying attention to a certain topic. So, at the top, Bitcoin was huge, right? Like Bitcoin and Ethereum were like number one search terms. Like, so they kind of peaked around their price peak. And these like hype cycles, these pumps bring in new people, right? So maybe someone this last cycle heard about Bitcoin because it was going up, because everybody's talking about it. They heard about it because they wanted to make money maybe, or because everybody's talking about it and everyone's talking about it because the price is going up. So people talk about things that go up, right? They don't really talk about things that go down because it's sad, it's depressing. We'd rather not look. We'd rather just like put our head in the sand and kind of wait and hope it stops. So as we pump, as every new cycle comes, it brings a whole new wave of people that are now aware of the asset. And maybe they don't buy it. Maybe they're just aware. And maybe the next cycle they actually get in. And so there's this like leg to awareness, to actual participation. But overall, it leads to greater participation and greater network scalability in terms of more people coming on and getting into Web3.
And so I like, obviously you could tell I like technology. I like everything like that. And so adoption is huge for me. So when can we see Bitcoin become a staple in our wallets, like everywhere? Like when can you get like a mainstream adoption for, paying for stuff, and who's going to win it? Like that's always my big thing. It's like nobody wants to jump on the loser, right? But making wallets for Bitcoin or whatever, and then Ethereum wins or Doge wins, right? So who's going to win?
Yeah. I don't think it's like a winner take all game.
It's like a MasterCard Visa thing.
Yeah, but maybe
Like
maybe,
you could use them all like they'll
yeah.
be socially or not socially, they'll be accepted at many different places.
Yeah, like it's not as fungible, like, basically like Bitcoin, Ethereum, like they're not like, the same thing. But I think there's room for a lot of different technologies in Web3. And just think of these as decentralized technologies, right? So this is basically distributed ledger technology, which is kind of what all of these are, these blockchains, right? Now, these blockchains are basically the next internet. This is like Web3, right? Like the internet 3. It's the next level of the internet. Now, this level is decentralized, right? Very different from Web 2. It's permissionless, right? It's all about communities, DAOs, decentralized organizations. It's about community participation. It's about the democratization of ownership, which is really new and didn't happen in Web 2. It's about getting rid of centralized tracking. It's about giving users and creators and builders more power. It's about disrupting business models that have enslaved creators and builders since time immemorial, and empowering them and paying them and removing middlemen. So like this is the zeitgeist of Web3. This is what it's all about. These things that I just mentioned. So there's so much room for these new technologies. It's like saying, it's like if we're in 1997 and you're like, well, is there room for Amazon and Apple in the future? It's like, does it have to be one?
Or is there room for VHS and Beta? Because there was not. Is there room for Blockbuster and Netflix? Because there was not.
Yeah.
So, like, how does it differ in that circumstance?
Yeah.
Like, because they're direct competition.
Yeah.
No, they're trying to get investors, just like
they're not in direct competition, actually. So I mean, those are good examples you mentioned with basically a new technology displacing an old technology, right? Like a superior tech. Right now we're talking about the same technology, which is distributed ledger technology, but there's different blockchains and different things being built on these blockchains that are all going to be part of Web3, and they all have a place. Well, let's say not everything that's built will have a place, but there's room for a lot of different technologies. NFTs are one of these technologies, and it doesn't mean every NFT succeeds, but this NFT technology in general is massive, and we are not even close to the beginning of this thing. Like, this is just the first thing, like these PFPs, what we're doing now with this in terms of like allowing artists to actually, do digital art and participate on the trading of their art, for time or for in perpetuity. There's so many cool things happening right now. It's mostly disrupting, media and culture and community, and some markets, but this is just the beginning. Like, there's so much more coming for NFTs, and NFTs basically just ride on Ethereum. They're built on Ethereum. They're also built on Solana and other blockchains. We don't have NFTs on Bitcoin. So they have different purposes. Like, there's a lot of money being invested in Web3 right now. Bitcoin is, basically a store of value, right? It's like a digital gold, but better than that and bigger than that, right? So it's a store of value beyond what gold could ever be or ever was. Ethereum also has store of value, aspects to it, because there's art on Ethereum. There's PFPs, there's other things that are valuable that we've decided are valuable that are traded on Ethereum. And Ethereum's actually done a better job of being money today than Bitcoin has. Things are actually priced in ETH. Like, you could go buy digital clothing, you could go buy, NFTs in ETH. You can buy art in ETH. You can't do that in Bitcoin. So Ethereum is like the layer. It's like, imagine the internet layer, and you could own a piece of the internet layer, and actually that piece would increase as the amount of activity on that inner layer increased. So there wasn't a lot of activity on the internet layer, the internet layers as we know them. And let's just think of that in simple terms as, what did we do using the internet, in like 1992? Like nothing, right? What did we do in like the mid 90s? Like email, we might've had a website, but there wasn't
Search
a lot
Pamela
of
Anderson pictures and they
yeah,
downloaded.
exactly. Like Napster, maybe, some chat rooms. But basically, there wasn't any commerce, right? There wasn't any, any culture. There wasn't any activity. We didn't spend a lot of time on the internet in those spaces. And imagine today, like if you were to look at a chart of all the activity, all that we did on the internet back in like 1995 versus everything we do today, it's probably like a million times greater, maybe more. And imagine owning that internet layer, and that internet layer is now a million times more valuable because a million times more activity happens on it.
Okay, so
That's like Ethereum.
So is this adoption? Is this people aren't using this layer of the internet, if we're using the back reference, because of adoption? Like 1 out of every 20 houses had a computer, or you know what I mean? So is it because of adoption, or is it because of the uses for this new layer that you're talking about?
Both. So technology adoption curves are a real thing, right? And like there's also great graphics out there that compare like any new technology and the adoption curve. And so every single one of them, whether it's the telephone, washing machines, like railroads, like, televisions, whatever, everything, cell phones, everything has an adoption curve, right? So Web3 like is just following an adoption curve. And, the other one was, so the first one is this adoption. The second one is this user. Well, the first one is the, these adoption curves. And the second one is what's on it, right? Like how can we use it, right? And so just like the internet, we didn't really know how we could use it, right? To the extent that we do today. And we still don't really know. We continue to find new novel ways to use it to make our lives better. And same thing with Web3, with this distributed ledger technologies. We are just there, we're innovating, and this is a global class of builders and innovators that are on the frontier right now. And the frontier in technology right now is happening, in crypto tech, right? In Web3. There's a lot of awesome technologies too, going on in like AI and robotics and energy storage and like, biochemistry and like biogenetics and lots of different areas, a lot of really cool tech. But in terms of like internet technology and, commerce disrupting technology, financial technology, decentralized technology, it's all happening in Web3. So this is the frontier of kind of the internet right now, of the new internet. And we do not even know what could be done yet. Like we're discovering new things. NFTs didn't exist like a year and a half ago, right? They weren't really a thing until even like a year ago. They weren't a thing. This is a brand new industry, and it's massive. Digital wearables are a brand new industry. Digital experiences are a brand new industry. The metaverse will change everything. That's going to be a brand new experience. And it's not like it's completely different from the internet. It's just the next evolution of the internet is what it is. And it is being built on Ethereum. Like Ethereum's still on the internet. Like we need the internet to use Ethereum, but all this stuff is being built on Ethereum. So Ethereum is more like a next layer of the internet, just like we had other layers for like writing and doing, voice and video over the internet. This is decentralized tech over the internet. And it's going to add a whole new level of value. And that value is going to accrue to a lot of these fundamental chains, Ethereum being number one, that allow for these builders to create all these companies and these organizations and this new tech on this fundamental layer.
So right now, what you're talking about, this new Ethereum, what can it do that the internet can't do? Is it the coding? Is it the security? Is it like the ability for people to be inside or be full digital? Like what is the draw? What is the first step in this Ethereum?
Yeah. So, they don't compete, right? Like this is just a next layer of the internet, right? So it allows for a decentralized everything. Okay, so this is like the fundamental topic. So it's decentralized, it's permissionless, it's trustless, verifiable, All of these things do not really exist like on the internet with Web 2. So like when we talk about, why is, let's say, Web 3 different than Web 2? So like Web 2 is like, think like Google and like Facebook and like, just the internet that we kind of like know today really, or we did like 5 years ago. You go on it, like you have your logins, which are, they're all like linked to like, you create usernames and it's like all linked to like your ID, and it's like, you got to always enter all your stuff, and like it's linked to your name. You're tracked everywhere you go. You're advertised everywhere you go by, Google and like Facebook, and like basically these are all just media companies, right? So this Web 2, like the internet, like Web 2, the biggest players, we know them, right? Like they've been building for 20, 25 years and now they're massive. These are the guys that are going to get disrupted with Web 3.
Because they're collecting information, and Web 3
they literally exploit
the
us.
Yeah.
That's right. So they give us free experiences at the price of our privacy, right? And so they market to us constantly. They have all of our data, all of our information. We give this to them for like these free experiences or like reduced price on these experiences. And right, like where do we spend most of our time on the internet? Like people are what? I mean, it's like YouTube. They're doing porn as always. They're doing gambling. They're watching videos, right?
Google.
Yeah, like maybe
Googling.
Googling, like this is what we do. And they're socializing, right? All of these things that we do right now on Web 2, and we do commerce, right? So like we go like book stuff, we trade stuff. All of these things that we do there, we can do in Web 3 in a decentralized, trustless, permissionless, verifiable way where we literally connect with a wallet that's not linked to our identity.
But you're still going to want to buy things, right?
Yeah.
So myself as a advertiser, I'm still going to want in Web3, I'm going to target you for something. I might not know who you are, but you're going to do things, and you're going to like to go fishing in the metaverse. I'm just using something ridiculous.
Yeah, so you might see like a wallet buys a digital fishing rod.
Yeah.
Okay. So, I mean, it's harder to market to like that wallet than it would be to market to, John Smith, who's, 45, lives in like Montana, has, 2 children. I read his emails. I listen to his conversations at home. I literally know everything about him. That's how marketing is done today. Mm-hmm. Try to market to this anonymous wallet that bought a fishing rod is a bit more difficult. I don't know how much value there is there. Mm-hmm. So it's about us not being exploited. It's about the users of the internet, right? The consumers, the users, not being exploited. It's about builders and creators actually getting their take. So like through smart contracts, we're going to disrupt all these middlemen, right? So smart contracts are on Ethereum. This is like outside of those key kind of fundamentals that I mentioned of like decentralized, trustless, permissionless, non-discriminating. Because you can't discriminate really against this anonymous connection where you can discriminate against, a person that you know who they are because you needed their ID to like create some Facebook account, right? You can discriminate against them. You can like market to them like around elections and like distort election results. So all these things are like really difficult to do in like a Web3 type of way. But smart contracts run on Ethereum, right? So, and these are basically contracts that require no oversight. They require no oversight, no middlemen. They just work. This isn't the way Web 2 works, right? Right now, like if you're trying to do like insurance, like law, like in terms of legal contracts, like if you're trying to do like financial contracts or even just trade or do anything, you require, a lot of middlemen. You could say goodbye to pretty much all your middlemen with Web3 because of smart contracts. That's a whole other innovation. So Web3's got all these innovations like through this distributed ledger tech and the stuff that's being built onto it, like in different layers, like NFTs built on. NFTs are just smart contracts, right? NFTs are basically part of smart contracts. Like they're basically just digital verifiable, tokens of authenticity, basically, that say like this wallet owns this thing. And everybody knows that. So there are so many layers of disruption that are happening. And then there's this metaverse element, which is basically, again, like we spend most of our time in the digital world these days, like so much time in this digital world, but our digital experiences suck, right? Like they really suck. Like, you go shopping on Amazon. It's a shitty experience. It's like a 1998 experience still, right? Like you're on some website, you browse, like imagine that experience.
It's funny you say that because like you're talking about shopping. And it's like you're flipping through, you're going on Instagram, you're flipping through pictures. Yeah. Now they've upgraded to video and doing all the video. And now same thing. It's like, 3D, you don't get to spin the thing around.
Horrible. It's a horrible experience. Like it doesn't take much for you to imagine a better experience, like an experience where, whether it's augmented reality, right? We've already seen that. Like I think Disney just came out with some show where you hold your phone up and it scans your room, like your living room. And then you can watch like this little movie they created with like an augmented reality, like waterfall coming out of like your screen, which looks incredible. So, augmented reality tech with like wearables kind of tech and like metaverse tech in terms of like virtual reality tech. So this physical tech combined with like this basically code tech, right? Like, because blockchain is just code, right? So you have the software tech combined with physical technology and innovation. It's going to create these new experiences where the experiences that we still do the same things. Like we're still going to like get together and like chat, but now we might be sitting in like the same room together, And
I'm going to look at that logo on your hoodie and I'm going to not ask you about it. I'm going to Google it inside my eyeball and it'll be like, oh, now I know exactly what that logo is.
You'll just think about it and then it pops it up and then
pops in your head,
and then basically like, something comes up augmented reality wise and like whatever, if you're wearing like a headset or if it's just like a screen in front of you or whatever. So it's basically just taking things to the next level in terms of our digital experiences. So a lot of Web3 is about digital, right? It's all digital. And in the digital world, NFTs have basically solved, how can we have a digital world when things that are digital aren't scarce? NFTs have allowed us to solve that. It has allowed us to create digital things that are scarce and digital portability. So like Roblox, Fortnite, all these things, massive companies, they sell digital goods in these games, like in these virtual worlds that are not decentralized. They're not on blockchain. They're very centralized. Like you could turn some server off and everything is gone. But people pay tons of money for all these things. I mean, they go there to have these experiences. And like, we're millennials, but like you got Gen Z out there and they like to get together like in a digital way, far more than we do. And then you got like Gen Alpha coming up behind them, and they're going to be even more digital. They like to hang out in these virtual worlds. Like they like to hang out with their friends all over the world. They're not hanging out with the kid down the street. So everything's happening digitally. They're doing it in like Minecraft or Roblox or Fortnite, right? But that's not the optimal way to have these experiences because they can't, have an avatar that's portable across different games, different worlds. Why isn't your avatar portable to go and like shop at Amazon and then go to like a movie and then go to see a concert in the metaverse? With decentralized, distributed ledger tech, you can do that. You can have a portable avatar that you take everywhere. That is your basically actual, not just your PFP, but it's your virtual avatar. And you can have clothing that fits that avatar or change it up. So I don't know if you've seen Player One, but that's kind of like the vision of the metaverse, of a metaverse. It's not necessarily the vision everyone's striving for or what it's going to look like, but it might give you an idea of some of the experience that could be possible. And we're probably closer than a lot of people think. There, like a lot of people, like there was a development the other day, like every other day you see a development that people thought would take like 5 years. The Museum of Modern Art in New York, the MoMA, is actually auctioning off $70 million of assets, including Picasso's, to expand into the digital world. They want to buy digital assets, digital art, PFPs, all NFTs. They're basically going to sell $70 million of Picasso's to go buy $70 million of NFTs. This is where things are going. They're going more digital. We're going to blend the worlds of digital and physical, what we know today.
This is cool. Hold on. Before I lose my thought. Okay, so you own a Picasso, right? You're talking about that museum. You own a Picasso. What's stopping you? You technically own it in the real world. What's stopping you from taking that and putting it into a digital form? Because technically you own the real ownership of it. And if somebody was to reproduce the Picasso or a Rembrandt or whatever, there's got to be something inside the metaverse that has like proprietary. You can't recreate Van Gogh's Starry Night, for example, right? Mm-hmm. So what's stopping everybody from having all their assets here in the real world converted into a digital version of itself?
You could probably, I mean, right now, like the technology would probably be a challenge of like taking a real Picasso and then creating like an incredible digital, rendering of it. So number one is the tech. I don't know if it's there to actually do it justice and create an incredible piece. But let's assume the tech is there, or the tech will be there right away. So, I mean, okay, so if I have a Picasso, I can go and create basically, let's say, a digital rendering of my Picasso that looks amazing, that I enjoy. So then I just have basically this digital rendering, right? And then what I can do is I could just make it into an NFT. You could do it on OpenSea in like 3 seconds if you wanted to. And then it's just basically, there's no collection. Like it's just, the collection is just me, right? My name. Maybe it's just an unnamed wallet, has an unnamed collection with an unnamed NFT in it that looks like a rendering of a Picasso. What's the value of that? Like, who cares? It's kind of worthless, right?
Until that museum does it with every single one of them. And now they have the museum inside, or a collection of their real paintings. And maybe somebody from Istanbul will never make it to New York. And they can go in there and they can see all of those paintings. I'm sure the technology is going to be there where it could be indistinguishable from the real thing, right?
Yeah, like I think this concept is super cool and definitely like very interesting. I don't think it has anything to do with NFTs though, or like decentralized technology, like because we really don't need anything, from blockchains to do this. Like you really just need the technology to take a picture, like a painting or a physical object, like whatever it is, and to create a digital rendering of it, right? And then we can display it on some like amazing screen in a museum. So it's probably being done.
It doesn't have to be encrypted. It doesn't have
like
to
none
be
of this stuff. You
scarce.
don't need to do any of that. But that's a great way to allow people to see some art all over the place. But I don't think that really merges worlds with like NFTs. And a lot of what's really being driven here is like I'm not a huge, art connoisseur, like collector or anything, or even know a lot about the space. But, there's been movements in art throughout time. And like some of the newer ones have been like the modern art, right? Modern art's been like huge. And, the MoMA, Museum of Modern Art, like no wonder they're kind of like pivoting to this, right? Because like guys that, focus on like Renaissance art and like all this old school stuff, this isn't really their world. Like I'm not going to go to some like Renaissance art museum or like, go to the Louvre in Paris and go try to look at some NFTs, right? Like that's just not their audience. But museums like the MoMA like are far closer to today than they are to, 1500s or the 1200s. So they're looking to pivot because modern art is really basically everything that's happened like today. Like things that are happening are like modern art, and like a lot of artists that are alive today, that's kind of like modern art. So this new wave of art is actually digital art. Like digital art is the new modern art. And all these digital artists that are coming up are insane.
The AI.
Exactly.
The AI.
Generative art.
Unreal.
So AI art, generative art, two different things there. So it's not just like an artist that paints something and then takes a picture and like says, that's my NFT. Like that's not what we're talking about. We're talking about generative art. So some of this is actually stored on the blockchain. Some of it is like, the token is stored on the blockchain and there are points to the art off the blockchain. But you have this generative art, which basically follows like an artist will put together a set of rules, an algorithm on how to make art, and then basically AI takes it and then just creates a piece of art digitally that's like incredible and stunning using this algorithm. And it could create like thousands of variations and iterations of this thing following this rules, and you can make it as tighter or as like, open as possible to see different creative like options. And then there's AI art where literally you just put in words, like you could be like, fine strokes, like purple, like, shadows and like, a hint of like violets, rays. And from those word descriptors, AI will just take that and again, create like as many iterations as you want and different levels of like, obscurity or creativity or like aggressiveness or creative freedom that you give it. And so like I've seen some of these creations, and even anyone can try this and can go and like try to create something of their own by just giving this the AI program some descriptive words. So a lot of well-known artists, not a lot that have pivoted, like some have pivoted from like Damien Hirst, I believe. They've pivoted from the physical, like they're actually artists in the physical world that we know, and they've pivoted to the digital space, and now they're like kind of creating amazing combinations of the two and like merging physical drops with like digital drops and like creating cool mechanisms and gamification of like you have to like burn the physical to get a digital. And there's so many interesting things in art going on. And this is, again, all happening like on the blockchain. So this is the stuff that MoMA is interested in. They're not interested in like someone taking a Picasso and creating a digital version and now they're going to show that. They're interested in the new artists creating the new art that, again, people are ascribing value to right now, that's being traded for, millions of dollars and will probably be traded for many, many, tens or hundreds of millions of dollars down the road.
So when you look at art and you're looking at Sistine Chapel, took quite some time to finish, whereas an AI could, theoretically finish a piece in minutes, right? Does that create some sort of less value, or like how do people look at it as far as like value on pieces?
Yeah, good question. So, I think we're getting deep into like, art valuation, and it's cool. I was watching a movie last night called The Price of Everything, and it's about kind of the value of art. I think it's on Prime. And ultimately we don't really know why certain things are valuable and why they're not. We don't know why certain things in art succeed and other ones don't, other than just it happens. So I think in the world of art, there are pieces that maybe didn't take a long time and they're very valuable. And then there's pieces that took a very long time and they're worthless, right? So I don't think, how long something takes in the art world is necessarily correlated to the value of it. It's far more dynamic and deeper than that. So, but it's a good point, I think
just putting on my cynical hat for a minute here, and when there's a lot of money to be made in anything, there's always exploitation. So what's stopping a guy from putting his computer and just letting it run and come up with these things and somehow marketing them as these masterpieces when they're actually not, right? Like, and because it's much easier than somebody who's not trained at oil painting to come up and do oil paintings and trick people. Like, of course, there's the paintings that are just splatters that some people go wild for. But, like, I'm just thinking, like, in the digital world, you can't really tell if this was made by an actual professional or, you know what I mean, or a 5-year-old with a good algorithm, right?
Yeah, and so, I mean, what this does is maybe even knocks down barriers for artists, right? So I can't draw, I can't paint, but what if in the down the road we're going to school and art isn't just about you have to be naturally good at painting or drawing. And like, what if it's about like, you just have to imagination. So you're like, you learn the terms that the AI uses. And then, now it's about like, well, what would be a great combination of these things, right? So now it's about like intellectual creativity. And so now you can create art with your brain without actually having to be naturally gifted at drawing or painting, right? Like I have a great imagination. I can see things and like I can imagine really cool stuff, right? And I'm just like, wow, what would that look like, right? And so if I can use the code, if I could speak to the AI using its language, right? Which is easier to use now. I don't actually have to code. I could just instruct it. And if I can learn those words of like how to speak in a sort of way that the AI can understand, like these different brush strokes and like these hints of light and color. And if I can learn how to like write, how to write these algorithms in terms of the processes of AI would take to create this art, that gives me massive opportunity. So like, this is knocking down barriers for creatives, right? So we might be seeing things that we've never seen before because we're enabling people to create that have never been able to because they weren't physically gifted to do that, but mentally they had it, right? They had it. So this could be incredible in terms of, what's created. And then to come back to like what's valuable, I mean, yes, because AI can move, at infinite speeds and create, infinite pieces off of the same directions. Someone still has to look at all of these and you're not just going to upload a million iterations of an AI export to your website and say, hey, everybody come and pick your favorite one. No one's going to care. It's too many things. People need for things to be expensive. Like, one of the quote from this documentary is art needs to be expensive or nobody cares, right? Nobody will treat it and with the right respect and value it, and it won't survive unless it's expensive. So art has to be expensive.
Won't survive. That's a good.
Yeah. It doesn't like, would you take care of something that's worthless? Probably not, unless it has sentimental value. But if something is expensive, like if a Picasso was worthless, like what are you going to do with it? I don't know. I don't necessarily think they're that great. So like, I might just throw it out, right? If it had no value. So, how does value accrue? Well, somebody must be willing to pay a lot of money for something. So let's say someone, like Beeple's been a very successful artist, right? So there's this, there's a sale, a $69 million sale, like really famous, kind of kicked off a lot of NFTs last summer in 21. His name is Meta Coven. And so he's this like anonymous, investor in like the metaverse, as well as digital art. And, he famously bought Beeple's piece. I think it's like Everyday's. It's this massive piece. It's like kind of a collage style piece for $69 million. Now that piece is worth a lot of money, and it's probably worth a lot more than $69 million. But if he never spent $69 million on it, what would that piece be worth? I don't know. Probably a lot less than that. So he came in and ascribed value to this asset. And now this asset is valuable. Whereas it maybe was not as valuable before, maybe not at all. So you need people to come in and pay a lot of money for art in the digital world, just like in the physical world, for it to be valuable. And the more people that do that, the more it trades hands, the more crystallized that value becomes by trades, the more that's ingrained and the more popular that piece and the more expensive that piece becomes.
So going back to the NFTs for a minute here. So how many of these the only ones I really know about is the zombie one and the monkey one.
Oh, the zombies, yeah. The CryptoPunks?
Yeah.
Oh, they're not. I mean, there are some zombies in the collection. Those are pretty expensive. The aliens.
The aliens, yeah.
There's zombies, but the aliens are the real diamonds there.
Okay, so you've got, so how many of these Bored Apes are there?
10,000. So it's a 10K PFP collection. 10,000. There'll never be more.
Oh wow.
And yeah, there'll never be more. And same thing as CryptoPunks, right? So like all of these collections some of them have different numbers, but the popular one is 10,000. And so there'll never be more. Like there's literally, it's written in the contract that only 10,000 can exist. You can't mess with that. You cannot create more Bored Apes. You cannot create more CryptoPunks. So
And
this,
who owns proprietary rights on that? If let's say it's Bored Apes and they do Bored Monkeys, and then they're like, it's a little too close for comfort. You said there was going to be 10,000. Now you're doing Bored Monkeys, which is just a slightly smaller version of it.
yeah.
So who would be the one that would be suing you for that, for creation?
No, they can do that. I mean, Yuga Labs can come out with another collection right now that's called Bored Monkeys.
Oh, okay.
And you know, creators and you know, developers, like the guys behind these projects, the builders, they've come out. Some have come out with 2-3 collections. It's pretty popular to come out with like your key collection, your main collection, and then if that's successful, to come out with one more, another maybe 10K or 20K collection. And then you kind of stop there because you don't want to dilute the brand, right? Like if you just keep creating it, what's the value of it? The huge appeal is scarcity, right? So you don't want to create too much because then there's no scarcity. And then if your community is not that big, you know, the price is going to drop. And again, price is important to perceived value, to perceived importance in this world, because this world is literally just in the middle of, you know, the kind of the future of our digital experiences, which is the metaverse. It's in the middle of culture. Like a lot of culture is happening right now in Web3. It's happening on the internet. It's happening digitally. So, and it's also permeating physical culture outside of the digital world. And it's permeating like media and music.
Yeah, talk about
art.
that a bit. Talk about what is some of the, like you talked about somebody opening a restaurant or something. What are the other things that they're bringing outside into the real world? Because I think it's like if people are hyped about it inside, like of course they're going to be hyped. Like I'm assuming clothing, stuff like that.
Yeah. So like, you know, I could take my mutant and I could create my own label if I wanted to, right? It could be like I could call it whatever I want. I can use my mutant. It could be like mutant ape, like number, whatever, my clothing label. So I can use it however I want to. So you know, there's the ones that I know about that have just been super popular. So there's this, you know, this restaurant, there's guys making ready to go like drinks, like seltzers. So like, you know, banana flavored seltzers, like, you know, I think it's called like Bored Dad. So you could buy these. I think they ship them all over States, maybe Canada, but you could go check it out. Bored Dad, like seltzers, they just came out. You know, there's people like launching like, you know, different tea companies, coffee companies, a lot of cannabis brands.
Can you call it Bored Ape, or it has to be something spin-off?
Yeah, so you can't use like Bored Ape Yacht Club.
Yeah.
But you could be like, you know, Bored Ape number, you know, 52. You know, drinks or whatever, right? So like, but you can't say like Bored Ape Yacht Club, right? But you could definitely say like, this is a Bored Ape. This is Bored Ape number 55 or 52 or whatever it is. And so like cannabis is huge. There's a lot of cannabis brands. There's a lot of digital brands in general, just like, and there's a lot of Web2 brands, like just like OG brands that we know that are like buying apes, buying mutants to be relevant, right? Because this is culture. This is what's cool. This is like,
Do we see spin-offs like in Nike and Bored Apes, like you know, them going together? Nike creates a Bored Ape.
yeah. So Nike is actually, you know, they bought an NFT basically team, and Nike's massive in this. They're a massive player. They're probably the biggest player that of like, you know, the old world. The biggest brand, right? Brands, this is very important. Brands are paying attention right now. And Nike was paying attention, you know, almost before anybody. So there's a project called Artifact. And well, Artifact's the team. Clone X is the project. And this project, you know, minted in like December, 20K PFP collection. And the team behind it is Artifact. And Nike acquired Artifact in early December of 2021. So they acquired this basically team of digital creators. And these guys were basically creating like digital sneakers, digital skins, like for video games and stuff like that. And they wanted to do something far bigger and like, around like PFP collection, around NFTs, and around like merging the worlds of like physical fashion, digital fashion, especially around sneakers. So Nike bought these guys, and so Nike's already branding their own NFTs with Artifact and CloneX. And so best way to check this out is go to OpenSea and type in Artifact. They just had a forging event where they basically released limited collections for different types of DNA of these PFPs, which is basically there's this whole like elaborate story behind these PFPs, and these basically like 2D avatars. They dropped 3D files for these, so creators all over the world are able to create these avatars that we'll soon be able to use in different metaverses like Otherside. But they dropped this collection of like digital pieces for your avatars that you could purchase, and only if you had the clones and specific type of DNA of clone could you purchase that collection. There was like 7 or 8 different collections, some more rare than others. So this sold out. Like Nike's made, I think, over hundreds of millions of dollars in the metaverse already, like in the NFT world, selling NFTs. And you were just recently able to forge these into real world items. So, you pick up different hats and shirts and whatever you like and sneakers. And you were able to say, yeah, you got a free physical one. And it's all free shipping, like free everything, arriving at the end of the year and early into next year. So Nike knows what's going on, and they've been if you go, I think, on their site somewhere, they say that they're creating a marketplace right now. They say they're creating a digital marketplace. And so what I think, what the community thinks, the speculation as to what Nike's really doing is they're actually creating the next wave of distribution. Aside from the digital goods distribution and like a presence in the metaverse, because Nike is a fashion brand, Nike is a luxury brand. Nike's probably the biggest, most important, brand globally right now. And they've done a great job of staying relevant for, a very long time, for like 50 years. And everywhere you go, there's something Nike, right? Like there's a presence and there's like an aura to Nike. So, they are curating right now with the clones. They're a distribution network for the future, of basically like a peer-to-peer distribution network where if you are, and this is speculation, right? But everything that Nike has said and done and showed us and everything that's going on in that community looks like this is what's happening. So if you hold one of these clones, and again, there's different DNAs of these things, meaning you get different rarity of like items and the look of these items. And then Nike's going to make goods available, goods, experiences to these specific clones, and in limited quantities. So if you hold a clone, you might get, you might be able to basically mint, pay a little bit of money for a couple of digital goods that you get a free physical good with it. But it starts with a digital good. And if there's demand for these things, especially like the physicals too, like sneakers are a massive market. Sneakers are huge, like a huge market. So if there's demand for these things, where are people going to get them? If like the hottest new sneaker that's going to be dropped is actually going to come through a CloneX mint, and you can't get it from Nike or anywhere else, you can only buy it from people that minted it. And now there's these NFTs. There's like 2,000 NFTs of this one sneaker that's like a Nike collab with Louis Vuitton, an Artifact. And, it's like an AF1 and it looks super dope and you want it. Everybody wants it and willing to pay like thousands of dollars, because people pay a lot of money for sneakers, especially if you're really, scarce ones. Those guys that were able to mint because they had clones are the distributors. They're the distributors of Nike of the future. And so they're basically these like digital distribution hubs that can then decide who they're going to sell to based on marketplaces. So Nike's building a marketplace right now, believe specifically for this, for basically this digital, physical, or phygital, as the term is, goods of the future. And that's coming on probably really soon. So they've been paying attention, and they're doing things that no other brand is doing right now. And it's actually really cool. I don't know if you saw the, I don't know what it was, but it was like a Nike, like some sort of show they hosted, but Drake was there. Drake's like, sponsored by Nike or repping Nike all the time. He had a jacket on, which is like an unreleased. It looks like you saw it.
It's on.
It had basically this like screen on it, and the Nike sign was like purple, like it was like glitching on and off, and like changing colors. Unreleased Nike jacket. Guess what? That looks like it was an artifact jacket. Like this is the type of stuff that's going to be out there. And
have you seen it in the digital world or no?
No.
This is pure speculation.
Yeah. I mean, he was wearing it.
Yeah.
But this is the kind of stuff that's going to be coming out. And how many people do you think want to buy that jacket right now? Like, I think a lot of people want to buy the jacket. And imagine the only people that can get that jacket are people who had clones who were able to mint that jacket for, say, $500. How much do you think people will pay for that jacket right now if there was only 1,000 of them in the world? Probably a lot of money. So this is the kind of stuff, that we could see in the future. LeBron is probably going to, be a big part of Artifact and Nike. And like all these athletes on Nike's roster are going to be coming out and like rocking these clone X's like Serena Williams just did in July. LeBron's probably coming out right away. Tiger's probably going to come out. How many other athletes other than Nike, reps? Like, there's probably going to be Jordan stuff. There's going to be Jordan, Converse stuff that's going to be done with Artifact. So Artifact is kind of blazing the trail of digital fashion. So fashion's also something that's really being disrupted in this like mix of like what's going on digitally and then how do we blend it in the physical world too. So it's not like we're only going digital and like it's like the Matrix, we're plugged in and like nothing matters. It's more of like a really interesting mix of the two and how like the two worlds blend together and coexist.
Is that kind of like we were talking about earlier about the internet in its infancy and just utilizing the internet, right? Like nobody was going to the internet, but you were going to the internet to burn a CD, for example, and then you would go back and play it in your car. Now we don't need that. We have Spotify, so we can stream it all day long. But until the technology catches up, it's almost like you got to keep people coming back to the metaverse to do this, and getting them to buy in. And once they adopt it, we're back at adoption, then they can run with it, right?
Exactly. So it's like what everybody in Web3 is focusing on is like, how do we get the next million people into Web3, right? And like, how do we get adoption? How do we make this, grow faster? So that's what everyone's focused on. And it's got to move at a pace that's acceptable, right? To the users, to the participants, to the builders, right? And in Web3, a lot of this, we're all the same in terms of like, we're the community, we're the participants, we're the builders. We can be if we want to be in a lot of these projects because everything's open source, right? And a lot of this IP, this intellectual property, is actually also basically open IP with this new type of IP called CC0, which actually, some of the other blue chip projects are using, meaning that anybody can do anything they want with this IP. Now, Bored Apes and Artifact are not CC0, so this IP is protected. But some other projects like Moonbirds, Goblin Town, and some other ones like Emphers are CC0, meaning that anybody can do anything they want. And this is the type of stuff that allows, the lore of like a new brand, a new, let's say, digital storytelling company in a way, or movement to spread extremely fast, and popularity of it to spread extremely fast. So we're seeing a lot of that. So there's innovation in art, in fashion, in music, by eliminating, by enabling creators of music, and allowing the users to actually pay creators appropriately and compensate them without middlemen directly, without like all the middlemen. Like 95% or greater of the value created in music is extracted by middlemen, right? And so this whole model is disrupting the way people appreciate, discover, and compensate artists.
Totally. I like that. So what are the things that obviously we're not gonna, like, you're not licensed, but what should people be investing in? Like, what are you No, not what should people be investing in. What are you investing in for fun? What do you see the greatest upside on? And what would you stay away from?
Yeah. So, you know, there's a lot of different, players in Web3. So like, I'll kind of step outside of Web3 for this question. And, you know, yeah, I mean, so I'll speak about what I'm doing, right? Everyone's gonna kind of do what they think is right for them. And, there's a lot of things that go into consideration there. For me, I have a high risk tolerance. And I'm also, have been investing for a very long time. And, I'm, I love that. So I love, studying new things, learning new things, and participating in like, Web3 specifically. And it's been, a fascinating time for me. So I think there's a lot of opportunity in Web3, in crypto, in NFTs. In a lot of different ways. So whether like if you're investing in, companies, so like traditional investing in companies in Web3, or if you're actually just investing in some, digital collectibles like NFTs, or if you're, looking to buy, Bitcoin or Ethereum. So for me, I'm focusing on Ethereum right now. I think the risk reward and the opportunity for Ethereum is incredible. I think after the merge, a lot of the narrative for Ethereum has really shifted. I think it's gotten a lot stronger. I think the narrative is very positive compared to Bitcoin also, because Ethereum is no longer proof of work. Proof of work requires this tremendous energy consumption because the financial community has this really big focus on ESG and like being green and lowering emissions. I think that's potential, hurdle to overcome with Bitcoin. So I think the institutional community is going to come around.
What you're saying is it takes too much to mine it, too much energy to mine it, and therefore,
yeah. And like I'm not, I'm not saying like it's bad and should take less. That's not my take. But though some folks that are very much governed, or their stakeholders, they're governed by stakeholders or other beneficiaries of kind of their decisions are folks that this matters a lot to, cannot invest in anything that contributes to climate change. Right. So, no matter what, no matter, how important it is, how good it is. So they have to stay away from it. And so I think that's something that's going to be, difficult for Bitcoin to overcome. I think Bitcoin still has, an incredible future ahead of it. And, is going to be the ultimate store of value, like a digital gold, but bigger. Like it's going to be a bigger market cap than gold because it's just so much better at doing what gold does. But I think Ethereum is now, it's proof of stake. So it no longer consumes any energy, basically, like Bitcoin does. So that's really big for more institutional money to come in. Also, it's deflationary. Bitcoin is not. So I think it kind of wins on the monetary, on its actual monetary policy, that it's deflationary. Bitcoin still has like a few percent kind of inflation rate, maybe like 2.4 or 2.8.
And where does it come from? Just from mining?
Yeah, from mining, new Bitcoin rewarded to miners. And, that's going to get halved every 4 years. The next halving is going to be like March in 2024, which I expect, to be a really big event for crypto again, just kind of like this last halving in, I think, May or June of 2020 was really important. So I think just all this, basically, I want to own the future, right? And I see that as Ethereum. So I'm focused on Ethereum and I'm focused on NFTs. Now it's quite concentrated, it's quite concentrated position when I'm really just talking Ethereum and NFTs. But I do think that's where the greatest opportunity is, especially where we are today. Like, if we were at the peak right now, it's probably still a really exciting place to be. But, you know, if we were like all-time highs right now, I probably wouldn't be as bullish on it, just given like I know we go through cycles. But given that, you know, how bearish everyone is, how much these assets have sold off, how strong the fundamentals are, you know, for some NFT projects, some NFT art, digital art, you know, accessible through NFTs. That's where, you know, I'm focusing my energy. And you know, that could change down the road. There are a lot of interesting opportunities today, like in the world of investing. And, you know, there will be far more, especially once we see a pivot by the Fed. But right now is the time to kind of make those bets, right? When, you know, when it's clear that we've pivoted and we're back to kind of monetary easing and stuff, it's too late. At that point, you know, a lot of the move has been made, and that could, you know, come a year from now. So, you know, for me, because I have a high risk tolerance, and I have a very long-term investment horizon, like I'm making decisions that I'm comfortable holding for, you know, 5 years, 10 years, 20 years. I don't really have a need for the capital that I use to invest in these things. So being a really long-term investor and having a very high risk tolerance allows me to you know, to make quite risky investments like Ethereum and NFTs, because they are extremely risky. Not just, you know, because these technologies, you know, could not work, but because there's a lot of risks of actually owning them, of you know, staying safe. There's a lot of you know, hacking, a lot of scams. It's pretty dangerous out there. So you have to kind of live this, you know, full time, and be very interested in it to be doing it the way I am. So it's not it's not for everyone, and but that's for sure where I think the most opportunity is right now.
So that's your speculation too, and then bringing it back around to the charts. So I asked you earlier about when you look at the charts. So why not talk about the charts for Bitcoin and the charts for Ethereum, and what are you seeing on there? Because you did talk earlier about there's that lower low, essentially, where it was at 20,000. So it does, if it breaks that, then you're in for some trouble. Probably it's gonna go right. So it's probably gonna hover and bounce off that line. I haven't looked at the chart, but I'm assuming that's what it looks like, right?
Yeah. I mean, you know, Bitcoin, Ethereum charts are pretty similar. I mean, ETH kind of bounced off of like 800, you know, back in like June or something. And so it's up like, you know, almost 100%, kind of maybe 75% from the lows, and Bitcoin's up like 20% from the lows, but it didn't crash as hard as ETH. You know, right now is very pivotal areas for both of them. You know, Bitcoin at 20, like, so very pivotal. If we see some continuation of this recent move, you know, kind of above 20 strongly, and then, you know, if we break 25, I think that's very strong. Again, just technically speaking, and that could be like goodbye to the 20s and everything below, and hello bull market in terms of like a slow climb out of this bear. You know, if we break 25 again, like, I don't know if we're coming back below 25. And Ethereum, you know, if we break above 2,000 in a strong way, like, you know, maybe 2,500, I don't know if we're coming back. But also, like, there is that risk of, you know, Bitcoin, some macro events, you know, who knows? I mean, everyone's worried about Credit Suisse right now, you know, going bankrupt, or you know, the stock's been cratering, and like Deutsche Bank's been cratering. So if there's like some like black swan contagion event, which like nobody thinks Credit Suisse or Deutsche are right now, Deutsche Bank, but you know, if something happens that is like unexpected and not baked into markets right now, like something blows up, then we could see panic, right? And when we see panic, people sell the most liquid assets out there, and the most liquid assets outside of like treasuries, like risk assets, are going to be Bitcoin and Ethereum because you could trade them 24/7. And those will see a lot of pain. And so we could see this.
Doesn't that create a problem trading it 24/7?
No, that's how it should be with everything. Like, it's a problem that we can't trade 24/7, like with stocks and real estate and bonds and all these other things. Like, why do they have to be limits? Why do we have hours? Do you know why we have these trading hours? Because it's this old system from like hundreds of years ago that relies on like people and work schedules. And what blockchain allows us to do is remove all of this. And it's literally just traders on the other side from each other. And why can't a trader trade from someone? Like, why are there hours? Like, if someone in Asia is trying to trade the US market, those hours don't make sense for them. It's stupid. So why isn't everything 24/7? That's the question. It just makes sense.
Yeah, because I have control. They have control over open and close and
Yeah. And all these, like if a stock crashes too much, there's like circuit breakers, and it's a controlled system, right? Like, and controlled systems are far more prone to, implosion. And it's kind of going back to Nicholas Nassim Taleb with his book Anti-Fragile, where we need to expose systems ourselves, everything to volatility continuously. And those things that are not exposed to volatility and are controlled are the most fragile. Those things that are constantly exposed to volatility are the most anti-fragile things out there, whether we're talking about systems, people, businesses, objects.
Mm-hmm. So volume-wise, how much volume is being traded on Bitcoin and Ethereum right now compared to, let's say, a year, like our last podcast?
Yeah. I think volume's off for sure. Because we were talking all-time high. Ethereum's, volumes are very high. A lot. I think maybe stronger. I don't spend a lot of time looking at volume. Again, like I'm not like some technical trader that, goes in and out of positions.
You're not in and out.
No, like I typically just buy. Like I don't sell. I just buy. I don't, take a position for like a month or two or days. I like to take long-term outlooks. What I have realized in the space though is and I wouldn't say in everything, but specifically in Web3, like crypto and NFTs, it would probably make sense to take profits at times, just because of the the greed and fear cycles are just like so much more pronounced and so much more frequent than in traditional markets. And if you don't have the temperament to sit through a bear market, like a long bear market, like we've been through this year, like a year of just down only, it might not be the right thing. You might just want to be more of a trader, but that's also extremely difficult to do. And I've never been a good trader, so I don't try to do that. What's worked for me is just kind of looking at fundamentals, focusing on fundamentals, having patience, and working on temperament, and constantly testing my thesis on my investment, right? And saying is this still valid? Like, regardless of price action, is this still valid? If it's still valid, then I stay in the position. So going through this last year has actually taught me a lot as an investor, it's been invaluable to experience all this pain. You don't really learn anything in a bull market. You don't learn anything at all. You just learn how greedy you are mainly, and how greedy everyone else is. But where you learn about yourself, about everyone else, is in bear markets. And that's how you become a better investor.
And so how do you, we're talking almost the entire year it's been in a bear market, right? Is that correct?
Yeah.
So
it's been horrible. Like literally down only. Like, it's crazy.
So how do you make money without shorting?
Yeah, I mean, I've not made money this year. I'm down like everyone else. I mean, crypto's been beaten up. Like all of my investments are have definitely down pretty big from the peak. So it hurts, right? Like it hurts. You can't short NFTs right now. I'm sure you will be able to soon. You could definitely short Ethereum crypto, but again, like I wouldn't bet against something like this. I don't think shorting is a good idea in general. I've never been successful at it. I've been burned on that, as well as options. So I don't typically like shorting options. I like to bet on things, not against things. And that's just my nature. I'm more of a bull than a bear. I'm more of like a believer and an optimist than a pessimist and kind of a doubter or a skeptic. It's important to be all those things, but it's a spectrum. And so I find myself to more of the one that's kind of sees the possibilities, rather than like sees the holes. So it's been quite painful to experience this. This time around for sure. Last bear market was painful, but I wasn't as intimately in the market as I am now and following it as closely and like in terms of asset exposure. So it's been very challenging, and it's definitely been a lot of times where you ask yourself, like, should I just sell everything? Like, was this a stupid idea? And those are the times where, and you don't ask yourself that in the bull, right? In the bull, you're like, I'm the most brilliant person in the world and we're all going to be super rich. And, so it's extremely humbling. And again, like teaches you a lot about yourself and hopefully, things you can use for the future. I don't think a lot of people learn from other people's mistakes, from reading books and someone telling you like, oh, I did, these are my learnings. This is what I did. Like, I think people learn by touching the stove, right? And
people don't believe what you tell them. They believe what they experience.
Yeah, and they're like, I'm different, like, or whatever. And so people need to do things for themselves. And that's how I think most people learn, and that's how I learn. And so I'm taking a lot out of this and reflecting on it daily. And it's been really rough. So bear markets don't last forever though, right? And I have fundamental kind of conviction in these blue chip assets, and I tend to stick to the blue chips. Like, I don't really go. I have kind of ventured out into the frontier of DeFi protocols and tokens and some fringe NFTs and stuff. But like, I always come back to blue chips, and that's kind of where I've always focused. And blue chips being like Bitcoin, Ethereum, and blue chip NFT collections and blue chip art. So in the Web3 space, right? And same thing kind of goes for, the tech space, right? Like, those are, like the bigger brands, the bigger companies, the bigger players are, they're far less risky, right? And it's incredible opportunities where you can pick them up, in bear markets where everyone is extremely fearful. I don't have any opinion on like the big, like NASDAQ players right now, like Apple and Facebook and Microsoft and those guys. But if I was in that, if I was paying more attention to that, like there could be some good opportunities there because everything's seen so much blood. NASDAQ's seen so much blood. Like, I think Amazon's off like, I don't know, 50% maybe. Like, Apple's barely been touched at like 20, but like Facebook's off massively. And so I don't have an opinion on the future of those, but I think if the Fed pivots, those are going to rocket. And those have great businesses. Yes, parts of those businesses will be disrupted with Web3, but I think we're creating bigger. We're making the pie bigger overall rather than just like divvying up the pie in different slices. So I think there's a lot of room for a lot of the great companies of Web 2, as well as all the great companies and projects that are being built on Web 3 and the great technologies that are emerging.
What's your vision for August Cove? Talk about that a little bit.
Yeah, that's that's been fun. So I launched August Cove, investment club, in July of last year, and my first idea was Bitcoin. Right, it came out end of July, so it's actually been going over a year now. I really, it started off as just I wanted to share what I was doing with people, and like, because what I was doing was very different from what other people were investing in. And nobody really knew about it and still doesn't really know much about it. And so I love to talk about it. So, when I would like talk investments with friends and people, I'd always talk about, crypto. And I'd always kind of be pitching the same story, telling them like all these things, kind of, the future and what's going on in those worlds. And so I just thought, what'd be more efficient and like what'd be more helpful is like if I actually wrote this up, if I actually wrote up like my investment thesis and like why I'm so bullish on it or my thoughts on it, and I could share it with people. Like I can make it digital, right? Like I can export my thoughts on this like infinitely. And so that's how it started. And that whole premise is like I put out an idea once a month. I didn't initially, think I'd be just writing about Web3. I thought, I'd put out a couple of Web3 ideas, like maybe Bitcoin, Ethereum, and then I'd write about stocks and, kind of more traditional investments. But just, NFTs came out then in like September, and there was like so much going on in DeFi. And so it was just such an exciting time. There's so much opportunity, and like, that's just where all my attention was. So, I basically have only written about Web3. Like I've written about DeFi protocols, NFTs, and cryptocurrencies like Bitcoin and Ethereum. For the future, I've put out an idea every month. So like maybe 13 ideas, 14 ideas now. There's also a portfolio update kind of. So I cover macro, right? I cover macro. I also cover like that impact on Web3, but I talk about stocks. I talk about real estate. I talk about, everything going on macro wise, and then bring it back to kind of, the investments I've written about and kind of my top picks out of the investments I've written about. And then, kind of touch on some cool news from the month and maybe some cool news from what's expected the next month. So there's kind of two things that come out. I did some, YouTube videos and other things kind of, looking to kind of grow, trying to grow the network, like trying to grow the subscriber base just to kind of get this out there. And it's really tough to do is what I learned.
In this market,
yeah. So
you do this.
So I think I peaked in like November or something in terms of like viewership for like any given like video I was doing. But I did some videos and would also just like share, a bunch of things about Web3, like how to like, set up wallets, how to transfer NFTs, how to like, invest in NFTs. So there's all that stuff on my YouTube, is accessible.
And what's your YouTube?
It's August Cove Capital on YouTube.
Okay.
And the Substack is I think it's just August Cove on Substack. It could be August Cove Capital. It's probably August Cove Capital on Substack. So yeah, I put out kind of the free version is you get this portfolio update. You get the new investment idea, but you only get like the first piece of it, like not the full thing. So I have a paywall there to kind of hide the investment thesis and the timing catalysts. But there's still a lot of good information there for like the free subscribers. And then put out like a, little 3 to 5 minute video kind of summing it all up, just a little teaser video. So that's kind of what I do now. So I've kind of taken a bit of a step back a little bit. It's a bear market. It's not focusing a lot of time on that. I am, doing some full-time work too. So time is precious, and I became a dad too. So now I have no time. Still love it, still plan to continue doing it. I don't know if I'm going to be doing Web3 all the time. Like it's not like that's all the only thing that I plan to focus on. My next investment idea, actually, I already, I have it, and it's not going to be an NFT. It's not going to be a 10K, PFP NFT project. It's still going to be Web3, but it's kind of, it's something a bit different, a bit interesting. I haven't done anything like it before.
And you're doing this next month?
Yeah. Yeah. So at the end of October, it's going to be my new investment idea. Pretty excited about it. It's pretty cool. Again, it's something different than the NFTs I've been writing about. And then, you know, after that, like I may even pivot into some stocks. You know, I'm seeing just some really interesting opportunities, and I may come back to traditional assets for some ideas and kind of just be a bit more diversified. So yeah, there's you know, a lot coming. I'm excited, and I always try to kind of innovate, you know, with the club. I might do a Discord at some point, you know, just a place for people to hang out, subscribe. You know, subscribers are still growing. So, you know, that's good. Like there's still, you know, I get some great feedback from subscribers, and so having a lot of fun doing it. Again, it's kind of, you know, a thing I do almost for myself as much as for anyone else. For me, it's a great way to kind of track my own investment journey, and, you know, see exactly where I was at every given month, and, you know, where my projects are at, like where my head's at. So it's kind of like my own little trading diary. So, you know, it's been really, really fun to do. And it's, you know, it's a way for me just to keep track of all the things I research, I think about, and a way to keep myself, you know, a scorecard, right? To kind of see, look, this is what I was into. This is what I said. This is what I was doing, and kind of like look back and see, you know, see how I'm evolving as an investor. It's all just like a journey of how do I become a better investor? You know, that's what I literally want to do every single day. And that's, you know, where everything, you know, that's the purpose of everything. And going through this bear market in, you know, the riskiest asset class probably there is today, you know, being NFTs and crypto, is extremely, you know, psychologically trying. And so, it's, yeah, learning a lot about myself, and, about myself as an investor, a person, and learning about the areas of strength, weakness, you know, how do I become better? Right. That's the question. So, it's cool to have all my subscribers kind of on the journey with me, because I'm pretty straight, pretty raw, and like, the stuff that I write about. And, you know, I don't recommend, you know, anything that I do to anyone. You know, I kind of share just what I'm doing. And I think a lot of people find it interesting, because this is a world that no one really talks about, no one hears about, and there's not a lot of credible people in the space, exploring it in such a raw way as I am, and risking my own capital doing it.
Perfect. 1 year from now, we're doing this again. What do you see? If you have to not, what are you investing in? Like, what do you just see like a year from now? I know it's really hard because you never could have foreseen where we are right now, but like we are where we are, and where do you see us 1 year from now?
Yeah. So, I mean, we got to wait a year before we do this again.
I'm just saying, I just, because it's tradition.
Don't make me wait a year, man.
Yeah. So it's tradition. So if we were doing this.
Yeah. Just a year.
A year from now.
Oh, well, I'll be very sad that it's been a year, but a year from now, I think the world's going to be very different. So, and you know what's also taught me this last kind of bear is, you know, especially like if you're in Web3, like macro still matters. You know, like some people like want to think like, oh, macro doesn't matter, but like I've become more of a macro, you know, macro kind of investor, and understood the importance of macro more so than I ever have, you know, during this last year. So, it all starts with macro. So for me, when I think about answering that question, I think about, you know, what is the macro picture in the world? So number one, macro, my take on macro, is that we're seeing deflation. And we've already seen deflation for many months. By October next year, you know, depending on how fast the Fed pivots here and how much further rates go, you know, we could see a recession. And you know, I think that, you know, would be kind of ugly for, you know, earnings and kind of layoffs and other things like that, and consumer demand and things like that. So. I think the demand side is for inflation is pretty strong. Like wherever, even if they pivoted today, like there's going to be so much demand destruction for the consumer. So I think inflation's coming down, and so because of that, I think the Fed's going to pivot very soon. I think inflation's going to be coming down aggressively, maybe even to deflation. So I think we're going to be back to easing as early as Q1, maybe Q2 at the latest. And so I think we're in an easing environment. So I would say that we could experience, in the absence of some, black swan macro event that causes us to have a very significant dip here in the next few months, because that's possible.
Or recession.
We're already in a recession, and so
Yeah, but some people are speculating that we might be in for a bad one in the upcoming year.
Yeah, it will be. It will be. But I'm thinking stocks and macro assets. And so all of these things kind of look like 6 months to 18 months ahead. So we're going to be in a really bad recession for sure. All this is baked into asset prices. So that stuff doesn't matter for future asset prices. It's more like what's happening down the road, right? So that's already like a guarantee. So I'm thinking now down the road. So the Fed's going to pivot. Monetary expansion is going to continue. Globally, monetary expansion is going to continue. That means that Bitcoin and Ethereum are going to be back to pumping. If they're pumping, that means crypto's pumping. And if crypto's pumping, that means, the entire Web3 space and NFTs, money's flowing back in, attention's flowing back in, and we're going to see a next wave. Now, I think this happens, as soon as like Q1. Maybe it even starts now, anticipating this Fed pivot. Maybe it starts now. The optimist in me wants to believe it starts now. It starts in October. It starts October 3rd today. And we're going to be kind of up in a choppy way until we really pump. And I think, we kind of dance around here, or we go up in a choppy way. And then I think we see some big upside in stocks, in crypto and in NFTs. I think this could be a big quarter for NFTs Q4, and I think it could be a big quarter for stocks and crypto. So I think we start here, and then we go through and continue next year. We do have a Bitcoin halving in March of 2024. So if we continue, if markets turn here, and there's been plenty of blood to say it's enough for a turn here. If markets turn here, and they continue to rise through 23, I could see us continue to rise through 24 into like a massive peak in Christmas 24, like a blow off kind of situation. Now again, I am a perma bull.
Some people have to take profits.
Yeah, and so
that's the name of the game.
Along the way, I've learned that I'm going to be taking profits, along the way, in the next bull. So whether this comes true or not, I think that's a very plausible scenario, and it's all kind of driven by the Fed again, and then just by Ethereum's, and then there's the fundamentals of literally Ethereum is being burnt. There's not enough. If demand increases, if there's more adoption of Web3, which is literally all on Ethereum, that's going to drive the need for ETH to pay fees, and that's going to drive ETH price. And then Bitcoin, we could see a front running of the halving, and this front running could literally start this summer. So that's this front running by investors ahead of the inflation rate cut, basically on Bitcoin. That happens in March of 24. So because there's different types of players involved, we could see all of this kind of front run into 2023, and then 2024, could be big. So I think we could come into a strong couple of years for markets here, into a blow off in 24. And then I mean, that's pretty far out. I don't know what happens after that. But ultimately we're in the depths of the bear that we've been in for almost a year. Everybody hates risk assets. Everybody hates assets in general. Everybody hates crypto. Everybody hates NFTs. Everybody thinks crypto is dead. NFTs are dead.
It's the time to buy.
Exactly. So even if we're in a bear for another year, I'll still be here. I'll still be in the space. So even if this scenario doesn't come true, as we know, like a lot of things change with the Fed these days and macro. So that's just one scenario, and I think that's a likely scenario. But there's definitely alternate ones. But you know, ultimately the fundamentals, whether it's now, in 1 year, in 2 years, in 3 years, in 5 years, I think Ethereum's going to be successful. I think there's going to be a lot more built on Ethereum. I think it's going to be a lot more useful. I think adoption's going to be higher. I think adoption's going to be higher for Bitcoin. And I think adoption's going to be higher for Web3. And utility's going to be higher for Web3. And Web3 assets are going to be more valuable because they're scarce in infinitely, infinitely eased monetary environment. So because of that, I think the long-term success of a lot of blue chips and the builders and the teams working on them, as well as, these two kind of fundamental Web3 technologies in Bitcoin and Ethereum, I think they're going to be around, and I think they're going to be stronger. And if that's the case, then their price is going to be higher.
Totally. Okay, great. So where can people find you? You've got August Cove Capital or August Cove on YouTube, and Substack.
Yeah. So August Cove on YouTube. So, you could go on there. There's probably not a lot of reason to go to YouTube because I do my videos on August Cove, like on Substack now.
Okay.
So I would say just go to August Cove Capital on Substack. And,
Do you have Instagram, Facebook?
Yeah, no. Substack is my thing. You can find me on Instagram, my Instagram is just like my private profile. So, and that's kind of linked to my Facebook. So I don't really do a lot of activity on there. So Twitter is my main place. Twitter, and it's just it's Andrew Plokhii, spelled differently than the way I spelled my name earlier here. I had a name change, kind of just driven by, I didn't like the way my name is spelled. I moved here from Ukraine and back when I was a kid, and they spelt my name in like a way that made sense to them, even though I never liked it. And so like back like 5 years ago, I actually changed it to the proper spelling, being like, I can't live this way anymore. And then didn't do anything for 5 years. And then finally now I'm just like, okay, I'm going to actually change it everywhere. So I haven't changed my Twitter yet. It's still my old spelling, but it's Andrew, Plokhii, on Twitter.
Okay.
And so I'm decently active on there. Kind of post everything that I do on the club, as well as just like my own take on what's going on. And it's, all investments, Web3 related, and macro on my Twitter. And the Substack's got all the actual content.
Okay, perfect. Okay, we're good. 2.5 hours. So now when you said, is there a time limit? Now I know what you meant. I thought you meant you had to go quickly.
Oh, and we've barely scratched the surface on like, I know it's talked about.
It's so good. And I just sit here and I listen to you and I'm just like, oh, I know nothing about it. I'm just like, that's why when you said you get off on a tangent, I'm actively listening and I'm just like, oh wow. Okay. And I'm genuinely curious about it. Something I have this curiosity for stuff that I don't know about. Like I know about gel overlay nails and acrylic nails and like I just know things about things that there's no point in knowing. And so it really interests me a lot and I'm genuinely curious.
I could tell, man. I could tell. I'm like, this is awesome, man. This was so much fun. We covered so much. This is crazy, man. I feel like we just covered like all of my learnings and like experiences and like thoughts in the last year. Like this has been crazy.
Oh, and I was learning so much and I was like, okay, just hold on a second. I have to like think in my head. I was like, hey, like you're going with so much and then I don't know where to go next because I didn't even, after we left NFTs, I had more questions about NFTs, but I didn't want to come back. Didn't want to jump around.
There's so much more there.
Yeah.
Like we barely scratched the surface on like all the things, but we had a lot of breadth. Like we touched on a lot of things.
Yeah. Okay. Good. I appreciate it, man.
Yeah. All right, bud. This was awesome, man.
Yeah. It's so much
all right. We'll see you next year, right?
Next year. Yeah. We'll do it next year, right?
Oh my God, man. What do you think, man? Any of that make sense?